Folks, if you watch the daily financial news, which I appreciate each and every viewer, you will know that I frequently quote data from Resi Club. Lance has agreed in a one-time only event to give you access and visibility into some of the Resi Club Pro data and information. Again, you can get 5 articles a week from ResiClubAnalytics.com. Go give them your email, get the articles. But if you are interested in housing, you are a data geek, and you want to know what's going on now versus maybe 2019, you got to get the pro version. It's ridiculously cheap. But hey, don't take it from me. Let's see what Lance has to show. What do you got, buddy?
Yeah, thank you so much for having me on. Got a lot of different data here as we come into the end of the year. I'm going to go and just share my screen and start going through a few of them.
Love it.
Give me a second.
Yep.
Going a little slow.
It's okay. There we go.
Yeah, so this first one shows the actually give me one. Might do this a little differently. It's going a little slow.
Okay. No problem. It's a lot of data it's crunching through.
Yeah, in the meantime, one of the things that's really interesting right now is that mortgage rates in the bond market are always ahead of housing data. So
Mhm.
right now we're kind of at that point where we're still getting housing data from when mortgage rates were kind of pushing 8. We're still in the
Mhm.
7 handles. And
Yep.
now in the real world, we're starting to get a little bit of duration
Mhm.
where mortgage rates have been around the mid sixes for what, about 3 full weeks now.
Correct.
Maybe not even full 3 weeks, but it's been a little bit now. And
Mhm.
so as we move into the new year, we'll start to get some of that data finally.
Love
And
it.
I think it's the more mortgage purchase apps, especially the seasonally adjusted, that's going
Mhm.
to be the most important to watch. And those, we don't get a reading this week. So we didn't get
No,
a reading
it's push.
yesterday.
Yeah.
Yeah,
Yeah.
we're on holiday.
Yeah.
So
You want to hear something really crazy as you bring this up? So one of my weekly conversations is with a mortgage broker, and they just quoted yesterday FHA loan, 80%, so 20% down, 780 credit score. Seller kicked in 2.5 points. Guess
fi-
what the 30-year fixed rate mortgage was?
5.7. Oh my gosh.
4.875.
Yeah. Yeah. Well, oh, so you said they kicked in 2 points?
2.5.
Okay. Yeah. I'm okay.
Two and a
That's
half
great.
points.
Yeah.
Sub 5. That's not good.
Yeah. Yeah.
That's not
So
good.
we've had an affordability improvement and the data is just kind of lagging behind.
Correct.
And it takes a second to get that seasonality kicking in.
Mhm.
So this chart shows the typical home value across the country by county.
Yep.
And I think it's a lot of fun to play with. The way I have the scale set 200 to 700, you're not going to get to see a lot of the variation within like a lot of the middle of the country. And there is, especially down
Mhm.
to like neighborhood level. But
Mhm.
it's interesting to see that the part of the country where there's the biggest acutage shortage of single family housing,
Mhm.
this area
Yeah.
the pricing and then the past decade, you've had the tech boom, you've had the low rates era, and the prices of this side of the country have just really pulled away from the rest.
Mhm.
The East Coast is what it is. That's not, that's kind of expected. South Florida,
Wow.
getting that's kind of interesting. The variation within Florida is really interesting. Another one that's getting interesting is the fact that, Nashville is just becoming so much unaffordable from the rest of Tennessee.
Mhm.
And so that's probably a good reason why we've seen more variation within Tennessee, Nashville versus the rest when it comes to pricing. And then
Right.
the same really goes for Austin. And Austin started to get really expensive, and Austin had construction. So
Mm.
I think this map actually helps to tell a little bit of the Austin story,
It
which is
does.
kind of pulled away from normal Texas prices, and it's really easy to build in Texas. So they got
Mhm.
that supply.
Yeah.
So just kind of a fun little map. One of the ones, I send out 3 additional pieces per week to Resi Club Pro members, and that's one of them that I sent out
Mhm.
last week. This is pandemic housing boom gains.
Wow.
Yeah. And the scale here is 0 to 60. And if I even took that to 80, you would still see some pretty dark purple spots in Florida, which is kind of crazy.
And again, just to define the pandemic, that was essentially March of 2020.
Yeah.
That was
And
kind of the
so it's
start.
10 now. It's pretty much and
Oh yeah,
I
March of 2020. There you
yeah,
go.
this
Yeah.
chart is actually 1 month behind because I have November data. But here is March 2020 to October 2023. Florida still up the most. Maine and New Hampshire. You got that remote
Yeah,
wave
New
right
York.
there.
Yeah,
Yeah,
New
and
York
then
really.
right up here, just above New York City, like all of this area, saw it too.
Uh,
And
yeah.
then the really interesting one is Arizona just up
Wow.
the Mountain West. And this is the part of the country that did see some give up in price.
Yep.
But you go and you look in these areas. I mean, look at how much they're still up despite, the give ups in price. A
Yeah, and
lot
again,
of
a lot of them had give up starting November of 22 and came through. So yeah,
yeah, and
that's
they're still up that much.
current up. Wow.
Yeah, and then an interesting one is just the weakness that we've seen around Mississippi and Louisiana. And we're
Hmm.
still in some of the data, still seeing some price declines there. I
Yeah.
don't have 100% grasp of what that story is yet. I looked at their GDP numbers, and on a real basis, they're actually negative since the start of the pandemic.
Ooh,
And they
interesting.
they have the most credit stress in the country,
Hmm.
which is interesting, and some of the weaker job numbers. So
Okay.
I don't know what's going on there. I don't know if it's oil and gas related. There could also be the fact that home insurance premiums are up so much, but a little more
Could be.
weakness there that we've
Yeah.
seen. And of
Yeah.
course, this Tennessee, North Carolina, Georgia was very strong during the pandemic.
Wow. That is wild to think, wild to look at.
And then this is my favorite one of the three. Give me a second to get to it. I should have already had these pulled up. That's my
No,
bad.
it's totally fine. Don't worry about it. Yeah, and the fact that you have all this data going back, years, if not decades, really shows the power in the Resi Club Pro.
And that's what I'm spending a lot of my time doing is just trying to make charts and visualize different data out there,
Hmm.
and less of the cherry picking, and like let's just kind of give people data. Like
Yep.
let's just give them access to the information. And if you want to find the truth on your market,
Hmm.
I try to make it easy and accessible to get to.
No, I think you do a great job. You're not just cherry picking the 50 biggest cities. You have the entire country covered. When you know that I talk about buy box and focus. So if people want to investigate markets, you've got the data. Pre
And
and post
and
pandemic.
and in January, I'm rolling out a lot more zip code level stuff.
Oh,
I went a little
nice.
slow with it for a couple reasons. One being it's just a lot of data, so it can
Hmm.
kind of slow down some of the charts. And then
Hmm.
the other thing is, at a zip code level, you can start to get really goofy things that start to happen,
Mm,
like a development could come in. And so
right.
inventory could move up for a different reason that's not necessarily, the cooling.
Yep. Yep.
Whereas at a county level, I can tell you this map, which shows inventory in November versus pre-pandemic in 2019.
Oh
If
my
you are very,
goodness.
very dark brown, you're down over 50%. And that tells me that your market just on the supply demand equilibrium is more competitive now than it was before the pandemic. If
Look
you're
at Texas. Texas
yeah,
jumps off the page.
yeah, it does. If you, um, yeah, it is interesting.
Easy to build in Texas, I'm guessing. I really don't know. I don't know Texas very
Well,
much.
I think a part of what's happened is there was a lot of supply under construction in
Mm,
Texas. And as mortgage rates moved up very quickly and that, demand kind of pulled back because that new supply was still moving into the market, it affected the existing market. So it
makes
caused,
sense.
yeah. and that's why the supply of the new home side is so important.
Mhm.
Well, actually, let me take that back too. The supply on the existing side is very important for the new side as well.
Correct.
If
Correct.
the existing stays very tight, then the builders can kind of run through that
Oh
supply.
yeah, absolutely.
But if that market equilibrium is affected to where existing supply moves up, and there's that new supply too,
Mhm.
that puts both sides in a bit of a pinch. So it came from both sides, but Texas has definitely cooled down. And I think another factor there is just the pullback in pandemic migration. There was a ton of
Yes.
people moving into Texas. That's kind of slowed down. Nobody really wants to sell their house in California right now.
Right.
Uh, and so
Mhm.
I think that's a part of the factor as well.
Yeah, the
But
other one that jumps off the page at me, just because I look at the market, is Vegas, right? South Nevada, inventory down. Clark
yeah,
County, yeah,
it's
45.
tightened up
Wow,
a bit. Yeah,
45%.
yeah, and I think a part of what happened there is Vegas saw what I would call a flash crash last
Mm,
year,
okay.
and and I think what happened is because the iBuyers, and there was a lot of iBuyers there too.
Yes. Yes, absolutely. Same thing
They
happened to
were cutting
Scottsdale. Yep. Yep.
they weren't acting like normal market participants, and they were cutting
Correct.
prices too fast. So I
Hmm.
think what happened in Vegas is the market went down on price too fast, and
Hmm.
it almost just hit the bottom really quick
Yeah.
and bounced back.
Boomerang back up. Yep. A
Yeah,
string.
and once that kind of iBuyer supply was moved through and that stress in the market, but this is kind of wild for Clark County to be down
Yeah.
40%, given where the market was just a
Hmm.
year ago.
I totally
Um,
agree.
yeah, and it was kind of the same thing in parts of down here
Yeah.
in
Maricopa and
uh,
Yavapai. Yep.
yeah, San
Yeah.
Diego down 48%.
48%. Wow.
Yeah, just
Crazy.
along the coast there. You can't see it here, but San Francisco County is up
Up.
49.
Well,
Yeah,
that's what happens when you have bad politicians doing dumb shit. People got to leave. Dumb
yeah.
stuff.
I actually, and maybe I'll email this to you afterwards. I made a Bay Area price chart
Oh, that'd be cool. Yeah.
year over year down to zip code level. And what you can see is it Alameda County?
Alameda.
Alameda County. They were down 12% year over year. Now they're up 1%. So they've kind of
Oh,
bounced. But
wow.
what's occurred is there's been a lot more strengthening around Vermont in that area. Oakland,
Fremont.
yeah,
Fremont. Yeah.
Oakland's very soft. Oakland's
Yep.
still down. And then
Okay.
San Francisco is still down in the proper.
Okay.
San Jose is actually stronger than I thought.
Ah,
Yeah, and Santa Clara, all of that is actually, they're up a decent amount. They've kind of bounced off
yeah.
their bottom. But it's kind of interesting. But so most of the weakness in the Bay Area is Oakland and San Francisco.
Yeah, it makes
And
sense. They have some of the tightest um, rules and regulations, so it makes sense that they
yeah,
would
and as
still
you
be.
kind of go deeper out from Oakland in
Mhm.
that part of Bay County, the Bay Area, it's actually fairly strong. Like those
Yeah, that would
excerpts.
make sense to me. That would make
Yeah.
sense.
And so here's my view on this. If you are dark brown,
Hmm.
the technicals of your market moving into the stronger seasonal period, coupled with mortgage rates coming down, that affordability improvement, I just really can't see how everything from like this part of Minnesota over is not going
Yeah.
to see, fairly, maybe slightly above average home price appreciation. It's just where the technicals of the market are.
Hmm.
And you look at a lot of like the parts of the West Coast, they've really bounced off that bottom and have
Hmm.
tightened up, and now you have an affordability improvement. And then it'll kind of be
Wait a second, Lance. Do you mean a tight inventory and rates down over 100 basis points actually might mean more demand? Are you telling me something about supply and demand? I'm shocked.
yeah. Well, so you have the technicals in the market, which is that
Yep.
the resale supply is still tight,
Correct.
and you have the affordability improvement.
Yeah.
So
Noticeably. Yeah.
yeah, yep. So that'll be interesting. It's, going to keep an eye to see what kind of happens in Texas and Louisiana and some of these parts of Florida.
Hmm.
I think if those markets see very little price appreciation in the first 6 months of next year, that's a suggestion that, they could be seeing some give up in the second half of the year,
For
depending on
sure.
what inventory stays.
Yeah. I
It'll
am
be,
curious. You talk to a lot of builders. I don't know what the numbers are, but I'm just going to use it the round number of 600,000 builds in 2023. I think that's about what they'll produce and sell, I think. Um, do you think builders are going to look at what's going on in the rate market, still use their rate buy downs and really step on the gas given this map? Or do you think they're going to still be, kind of slow and steady?
So this is interesting. That's a great question. You can tell you're a housing person. Um, so what has happened is that when mortgage rates started to move up this fall,
Hmm.
one thing I noticed from a few of the builders buy downs that I track is that the builder buy downs moved up along with
Correct.
mortgage rates moving
They
up.
did. Yep.
And Rick Palacios and the John Burns people also posted about this.
Hmm.
And as mortgage rates moved up, the buy downs got less sweet. So as the
Correct.
mortgage rates went to 8%, one of the ones that I tracked in Colorado that was a 4.2% buy down
Hmm.
moved up to like 5.6. So
Yeah.
it
I
swung
saw
up.
that too. Yep.
And as mortgage rates have come back down, that one's come down to like 4.8. So they're kind of moving with the mortgage rates. And I
Yep.
think what they're trying to do is keep their advantage on the existing market.
Hmm.
So if the existing market is dealing with 8% mortgage rates, okay, maybe they're pulling up and they're like 6.5s.
Correct.
And if the resale market is dealing with 6.5 mortgage rates, maybe they're kind of pushing down to the high fours.
Right.
I think they're wanting to keep their advantage. One other interesting thing is, and I don't know how much buyers or sellers will have to do this because they could see a market that is getting more competitive next year.
Hmm. Hmm.
But as some of these loan officers get a little more savvy, if some of these sellers are kind of dabbling with some of the buy downs, how does that affect the builders? Because the
Yeah.
markets where sellers on the existing market would potentially do the buy downs is in the markets where builders are probably heavy and are weaker markets, if that
Mm.
makes sense.
It
Whereas the
does. Yeah.
markets where sellers don't need to do the buy downs and they're already more competitive markets, those are
Hmm.
probably already the places that don't have any builders, right?
Mm.
Which is one of
I
the
gotcha.
reasons that resale is so tight.
Got it.
I think that could be interesting. So it'll be interesting to see what builders do. But the other thing is, if the market gets more competitive
Hmm.
and we kind of pull out of this period where, pressurized affordability has kept so many of these buyers on the sidelines, if we get to a market where builders are, selling easily, they're not going to do as many incentives. They're going to pull back on the
Well,
incentives.
let's play with that.
So,
Let's play with that a little bit because you're absolutely right. The incentives could go away. They could do that. The other thing they could do, and again, this was really my question to you, is they could increase capacity by 30% and right, kind of make it up in volume, right? So,
yeah. Well,
that
yeah, that
that's
would be one of the things that we would kind of hope for is that single family home builders continue to build, maybe
but that's
even,
my question. I don't. I was around in '04 and '05 when building was everywhere.
yeah,
It's nowhere close. And I
yeah,
don't I really don't know because I think you're right. I think the builders will go, you know what? We're comfortable building the volume we are. Let's reduce our incentives so our margin goes up. And they're going like I don't think they're going to be in a rush to fill the void, right? I've said, and you've heard me say it 100 times, the housing market's broken. And I don't think builders are in a rush to add supply.
yeah. I think that I think I think the builders kind of like the spot they're in where
Exactly. They
they
like it.
feel like single family homes are underbuilt across the country.
Correct.
Expect and they're really even more underbuilt in the segment of the market that's the easiest sell right now, which is affordability.
Exactly. First time home, affordable
That
homes.
entry
Yep.
level is kind of where they're going. They're kind of getting smaller, and
Exactly.
they kind of like where they're at. And they also, what's very important that doesn't get talked about much is this cycle, the past 18 months,
Mhm.
they've learned their playbook for a downturn uh, in
Exactly.
the post Dodd-Frank era, which is buy downs. These
Buy
buy downs,
downs. Yeah.
it's going to be these buy downs. I think the buy downs are going to be what they're going to continue to do going forward if they get into a pinch.
Mhm.
So if we have a abrupt downturn at some point in the next 3 years and
Yep.
the home market pulls back quickly for a bit, they'll probably turn to the buy downs. But
Yeah.
I think they like the spot they're in. And when I talk to some of these executives, that's kind of the thing they give me, which is if a downturn comes, they kind of know what they're going to do.
Hmm.
And they kind of like the
They like the
nation's
spot they're
underbuilt
in.
single family homes. Yeah.
That's exactly what I feared is we need more supply, right? Everybody's looking at the existing home market. It's not coming, in my opinion, for a couple of years until life events stack up. You know, it's not one kid, it's two kids that cause you to be uncomfortable. Uh, but the builders are like, you know what? I'm good. Record profit margins. We're moving units. We're turning over dirt. I'm not too stressed. I don't have this big overhang like we did in 06, 07. So you're right. I think the builders are content to live in an environment where housing is underbuilt. I think that's where they are.
Yeah, and there's also the who also is in a fairly happy spot is builder adjacent, the remodeling stuff.
Oh, true. You're right.
When I talk to Brad Jacobs, who's a billionaire and he's built, $7 billion companies now, one of the things that gets him giddy about trying to build a big company in the building material space, he
I saw
wants to
that. Yeah.
buy up a bunch of building material distributors, have this huge network of building material distributors. And the one thing that gets him excited is the fact that he believes we're underbuilt for housing, for single family housing, and the fact that the typical home in the US is like over 40 years old.
Yeah.
The
He's
age of the
right.
housing stock
He's right. Yeah.
means that there's going to be a lot of remodeling, a lot of need for materials. So he kind of feels a little, bullish on the setup. He said there's going to be
Hmm.
cyclical periods throughout it, but long term, he likes the fact that there's going to be a natural growth in the market.
Yeah.
Um,
Lance, you've done an amazing job with Resi Club. Remind us where folks can go to get the free 5-week articles, but more importantly, where can they go to get the paid version? Because Resi Club Pro provides all the data for them to slice and dice, plus additional articles. Tell us where we should go.
Yeah, so Resi Club Pro is my offering for premium members. And then I have Resi Club, which is just my daily newsletter, 5 articles a week that go out. If people Google Resi Club Analytics, they can just drop in their email, get the free one. If they want the paid, they can have the option to do that. And also, if you follow me on Twitter at NewsLambert, always posting a lot of charts.
Mm-hmm.
One of the nice things about Resi Club Pro, though, is if you're hearing about people talking about like, inventory building up very quickly, I do this map every month.
Yeah. Yep.
And I do several inventory maps every month. And so you can actually find out what's just happening for your market for
Exactly.
inventory really quickly.
Yeah.
And you don't have to, care a lot about this noise that's out there.
Yeah. You don't have to care about opinions and emotions. Lance Lambert brings us Resi Club Analytics with the real data. Buddy, I appreciate you. Thank you for being here every week.
Thank you.